This is Japan Market Brief. Here is your longer daily podcast for March 24, covering the rebound in Japanese equities, the still important currency backdrop, and one stock that stands out today. Japanese equities recovered on March 24, but the market did not suddenly escape the yen story. The Nikkei 225 rose after a heavy prior session, yet investors were still watching dollar yen closely and still treating intervention risk as part of the backdrop. Let's start with the numbers. The Nikkei 225 finished around 51,870, up roughly 0.69%. Topics gained about 1.45%. Dollar yen eased to around 158.6, which was enough to give the market some breathing room after the pressure seen on March 23. That combination mattered. The rebound in stocks was helped by a slightly calmer currency market and by some relief around the geopolitical backdrop. But the session did not feel like a full reset. It felt like the market was willing to take a step back into risk, not ready to declare the danger over. The foreign exchange story still led the macro interpretation of the day. The top headlines again focused on intervention risk and on the possibility that Japan could respond if the yen weakened too quickly. So even with equities higher, the key market discipline remained the same. If dollar yen moves back toward uncomfortable levels, policymakers may feel compelled to react more strongly. That is why the rebound needs to be interpreted carefully. In a simpler market, a rising Nikkei and a softer yen move might signal a clean return of confidence. In the current environment, it means something narrower. Investors were comfortable enough to buy the dip, but not comfortable enough to forget the policy ceiling created by the currency. The day's news reinforced that point. The yen was still close enough to intervention-sensitive territory to matter, but it was not pressing the market as hard as it had in the previous session. That slight improvement helped equities. At the same time, the overall tone remained cautious because investors know how quickly the currency can move back into the center of the story. So this was a relief session, not a resolution session. The market improved, but the core macro question did not change. Japan is still trading inside a framework where stocks, foreign exchange, and policy signaling are tightly connected. The stock to watch today is Toyota. NHK reported that Toyota will invest about 160 billion yen in U.S. plants, including Kentucky, to expand production capacity for hybrid vehicles. That is a meaningful announcement because it points directly to where global demand still looks durable. Hybrid vehicles continue to attract customers who want fuel efficiency without committing fully to pure battery electric adoption. Toyota's move also fits the company's broader strategy. Rather than leaning on one all-or-nothing technology path, Toyota has kept pushing a multi-pathway approach that includes hybrids, plug-in hybrids, and EVs. In the current market, that flexibility matters. Investors are showing more interest in companies that can respond to actual demand rather than chase a single narrative. That makes Toyota useful as more than just a big auto name. It is a read-through on how Japanese manufacturers are positioning themselves for the next stage of global auto demand. The fact that the investment is aimed at the United States also matters, because it ties Toyota's story to a market where hybrid demand has remained resilient and where local production can support pricing and supply chain flexibility. In today's market, Toyota offers something investors want: a concrete growth investment tied to a practical product category inside a company that still has scale and execution credibility. That can make it stand out on a day when the index is improving, but not yet fully trusted. Going into the next session, watch whether dollar yen remains calmer below 159. If it does, Japanese equities may keep building on this rebound. But if the yen weakens again, intervention fear can quickly return to the front of the market. On the stock side, watch whether investors continue to reward companies like Toyota that are making targeted investments tied to visible demand rather than speculative growth themes. That is your Japan market brief for March 24. The market was better today, but still not free from the yen. And Toyota stood out as a stock that matched the more selective optimism returning to Japan equities. Thanks for listening.